let's now take a look at the property markets, with a particular focus on the investor after a sort of drop off last year with many investors looking to offload their properties. What's the picture now as it presents itself in 2024? Anthony Landahl joins us from Equilibria Finance. Anthony, welcome. Happy New Year to you. Haven't had a chance to catch up with you since the beginning of the new year, of course. Let's just take a look back then what we saw in 2023 from the investor perspective, given that rapid rise we saw in interest rates.
Yeah, g'day Andrew. Nice to be back, mate, and Happy New Year. Look, 2023 was a really challenging time for investors. We saw credit flows drop around about 30%. We saw total sort of credit flows drop from about $11 billion to $7.5 billion. We saw supply challenges with investment grade stock, very difficult to actually find property. Construction costs of labour were making new investments difficult. So for those trying to enter the market, very difficult environment. And for those existing investors, the cost to hold the property was the main challenge. We had, albeit strong rental yields, we had some mortgage costs going up by 40%. So there were a lot of cash flow challenges. And as you intimated, there were investors offloading properties. At one point in Victoria, around about 50% of stock was actually investor stock. So that, with investor listings up, with a little bit of political uncertainty, talk of tax changes, in fact, tax changes happening, investors really were out of the market in 2023.
Okay, so with a focus then to this year, and of course, we've just been hearing about the expectations of rate cuts. And I guess realistically, we're not going to see that in Australia until at earliest the second half of the year, perhaps in the last quarter. With that in mind, plus of course, we're seeing those rental prices continue to increase. How are investors looking at this, I guess particularly with those yields?
Yeah, look, I think there's a little bit more optimism around investors, and I think it's important to split the investors to an existing investor and a new investor. As we discussed a minute ago, existing investors had a lot of challenges last year, but I think with the rate hiking cycle, for all intents and purposes, we're through the worst of it. Obviously, there may be some more rate hikes. We've had the employment data out today. We've had some good encouraging inflation data. So investors are now able to relook at cash flow modelling. They're now able to relook at their gearing strategy. So I think with that, the worst of the rate cycle gone, existing investors are able to look at their cash flow. Stock's obviously critical, but I think we've got this two-speed market happening at the moment where there were some overvalued areas, particularly in some of the regions. We're seeing strong growth in Perth, Adelaide and Brisbane. So investors are back out looking at some of those opportunities that maybe have been overvalued, come back to market, that the fundamentals stack up. So I think with some diverse market conditions, I think with the worst of the rate cycle over, maybe Q1 and Q2 investors will start taking a cautious approach, but I think we'll see their activity pick up in the second half of the year. The other thing for existing investors is a lot of them have created equity, which they can now draw on to leverage into their next properties.
How wary though, particularly those new investors, would they be of property price growth? Look, there are many different forecasts out there as what we're likely to see this year, but it is a question of timing and I guess affordability.
Yeah, it is. It's always around timing, and I don't think anyone expected us to be where we are today. I mean, I think when we were talking at the beginning of 23 and at the end of 23, we were talking about that V-shaped recovery where we were back above some of those older conditions. I think the main thing for the new investor is Australia fundamentally has a supply and demand shortfall. So the fundamentals of our market continuing to grow are strong. We're seeing in the December quarter a slowdown in the rate of growth. But I think for new investors, it's about seeing it as a process, about understanding the right type of property that they're looking to purchase as an investor, and also staying disciplined around that and taking a long-term approach, because the fundamentals of Australia's property market are strong. We've got strong rental. We've still got those strong migration numbers. There's challenges around the construction industry at the moment in terms of building new dwellings. So that supply and demand mismatch remains. There's people needing rental properties, whether it's migrants or existing renters, and the fundamentals of our rental market remain strong with those high yields. And as I said, with those interest rates now stabilising to a certain extent, investors are able to redo their cash flow modelling and understand their gearing strategy and understand their cash flow and what it's going to take to hold a property.
And Anthony, what are we seeing from the lenders at the moment who are trying to entice those new investors?
Yeah, look, the lenders are out there lending. We've seen some lenders, in fact, increase their loan to value ratio thresholds for investors. I wouldn't say we're particularly seeing a loosening of policy per se, but we're certainly seeing some encouragement for investors with some pretty good interest rates, whether it's interest only or principal and interest. We're seeing some providers shift the loan to value ratio or the amount of deposit an investor would need to get into the market. So there's definitely um, providers are definitely encouraging investor credit. They're not making it any more difficult. So if the fundamentals stack up, providers are out there. They've also loosened, I guess, for want of a better term, some of the policy or analysis around the rental yields. So some of them will take more of the rent now as income because we're seeing these strong rental yields consistently now. So there's definitely some opportunities there for investors looking to borrow, and we're seeing some policies the lenders are producing at the moment that are assisting that, no doubt about it.